Hi, this is Brett with Monarch Capital Home Loans, and today we want to talk real quick about the importance of knowing your options because there is a one-size-fits-all kind of problem when it comes to the lending industry, and that is that there is not one approach to take for everybody. Everybody should not be in a 30-year fixed. Everybody's not going to get the same rate. There's a lot of variables involved, and you may already know that, but that just means as a consumer you want to understand what your options are. And the first thing to do is to understand that there's a lot of different available programs. You may be kind of a fastball down the middle and be a conventional loan that's going to be securitized by Fannie Mae or Freddie Mac. You may be upside down on your house and need to take advantage of HARP. You might have a credit problem, a low credit score, or even low down payment trying to purchase a home. FHA may be a good way for you to go. If you're a veteran, there are awesome programs through the VA in terms of down payment assistance and no mortgage insurance and so forth. If you have a large loan and you don't qualify for Fannie and Freddie, there are niche products. There's lots of different kinds of jumbo products available for you. And of course, if you're over 62, there's reverse mortgage. There's even more, but this just gives you an example, and you want to work with somebody who's going to guide you down the right path so that you make the right decision. The next thing that you're going to want to talk about is what term of the loan should you get? The real question is, do you want to have a rate that's going to be fixed over the short term or the long term? A lot of people default to saying that they want to have it fixed over the long term, but that's not always the best advice. The average person is only in a 30-year fixed loan for about 6 to 7 years. So it may very well be that a lower rate adjustable is a good product for you. It just depends. There's no, again, one-size-fits-all sort of approach. And then, of course, you need to weigh out the cost of the rate that you're getting. It may make sense to pay points to buy your rate down. It may not. A lot of that has to do with how long you're going to be in the home and what your goals are and what your cash situation is at the time of the loan. So there's quite a few different variables, and our job is to help you understand the different options you have and why we're making a certain recommendation so that you can feel confident that you've made a good financial decision for you and your family.